Global stock markets opened the week with a strong rally. At the same time, China does not fit into this optimistic future. The recent rate cut by the People's Bank of China cemented investors' fears about the state of affairs in the world's second-largest economy. Let us remind you that central banks in the US, Japan and the UK will announce their decisions on interest rates this week. In this context, risks provide additional support to the price of gold as a safe haven asset. The precious metal has been trading higher for the second session in a row, and today it's trading in the intraday corridor over $2,386 to $2,402 per troy ounce. Bitcoin has also jumped today. Investors are shifting focus to Bitcoin as a safer asset. Bitcoin rallied to $70,000 on Monday, so it has reached the landmark level for the first time in 6 weeks. The price of the flagship cryptocurrency is also fueled by the Republican presidential candidate. Moreover, the scope of Donald Trump's forecast and communications has a global scale. For example, speaking recently at the Bitcoin conference in Nashville, he said that Bitcoin is the symbol of freedom and independence. Crypto is the money of the future. Then the US should become the crypto capital of the world. Donald Trump also pledged that he would immediately fire current chairman of the Securities and Exchange Commission, Gary Gensler, on the first day of his presidency. It was Gensler who suspended the green light for spot Bitcoin and Ethereum ETFs for a long time. He was also to blame for the Commission's long-term litigation with Ripple. In this way, Trump hopes to win over as many crypto fans as possible to his side. While gold, the US dollar and Bitcoin are rising in value, Wall Street is suffering losses. For example, the S&P 500 recorded declines for 2 weeks straight. For the first time since April, the index lost 0.8% over the past 7 days. On a Monday, July 29, the S&P 500 is consolidating within the range of 5,430 to 5,488 in anticipation of a keen news from the Fed Reserve on a Wednesday. The decline in the US stocks can be attributed in a way to the US consumer inflation report released on Friday. The consumer price index rose at a faster pace of 0.2% in June from a month ago. Analysts had projected a flat reading at 0.1%. Despite an uptick in monthly terms, the consumer inflation data did not have a great impact on the market sentiment. Markets still expect the first rate cut in the US as early as September. Moreover, the first rate cut has already been almost worked out in the market quotes. Therefore, the slightest changes and any hints in the accompanying statement of the regulator at the press conference of Fed Chairman Jerome Powell can greatly affect the volatility of the world currencies and stocks. The US dollar is likely to trade flat until Wednesday. Its index has been trading in the range between 104.10 and 104.50 for the last week. Another scenario is that the US dollar index may test technical support today at about 103.95. To sum up, the greenback has come to a standstill before the meeting of the Fed Reserve and the empty economic calendar. Amid the completely empty economic calendar, in theory, the euro would generally remain unchanged. In practice, the euro-dollar pair not only slowed down its downward correctional cycle, but again slipped to the area of 1.0825, which is tested in the middle of last week. Before this, the euro went through pullback, stagnation, and subsequent regrouping of trading impulses. The euro-dollar pair opened the new week in a narrow range of 1.0827 to 1.0873. The downward move will become even more relevant if the price moves below the key support level of 1.0825. In this scenario, the odds are that the instrument will touch 1.08 below in the attempt to break it. The upward scenario assumes the completion of the correction cycle. Then traders are going to add more long positions. In this case, the instrument may gradually return to the local highs of 1.0880 to 1.0895. Today, the dollar's growth relative to its rival currencies is triggered by alarming geopolitics. Tomorrow's reports on inflation in Germany and GDP growth in the Eurozone may change the balance of trading forces in the main currency pair. On the back of inflationary risks, oil prices are highly volatile. For example, over the past 24 hours, the Brent price managed to break through the key support at $81 per barrel and test the zone below 80.60. Later on, it rebounded again, but its trading chart can hardly be called stable. This dynamic still seems weird and defies expectations given the downtrend in the U.S. crude oil inventories. Moreover, judging by the latest data, Washington currently plays the role of a moderator of the world's market. That's with its experts. The U.S. maintains a slight predominance of a supply over demand. From the point of a technical analysis, the level of $80 per barrel acts as a support for Brent sellers. For further selling, the peers need to gain a foothold below this level, and the main driver of oil prices in the coming days will be the decision of the Fed Reserve on the funds rate and comments by Jerome Powell regarding the Fed's further actions. At least some intrigue remains regarding the Fed Reserve's policy decision. However, the decision of the Bank of Russia last Friday did not surprise anyone. As expected, it hiked its key policy rate from 16 to 18%. Again, quite expected, this step pushed the ruble down. In fact, the scale of the ruble's fall was modest. Most likely, this down move was caused by the previous strengthening of the ruble, which happened the day before the meeting. Meanwhile, the tax period is coming to an end soon, so the supply of a currency has been phasing out. In other words, the market will begin to more actively work out the Bank of Russia's rate hike over the next few days, so the ruble is set to lose ground. You have watched Market Review on the InstaForex TV channel with me, Kate Stichina. We wish you profitable deals and see you online soon. This year, new sports are included in the Olympic in Paris. Breakdancing and men's synchronized swimming. Perhaps it makes sense to add the cleaning competitions next time.